there were over $8 million worth of puts on the S&P 500 that hit the tape on Friday alone. So this is just from Friday over here. This is pretty unusual, especially for 2024, because everything has been, for the most part, bullish, especially if you follow the Cheddar Flow Twitter account. There always seems to be some type of bullish order hitting the tape on there. And then also, if you look at the Cheddar Flow feed, typically is the case. But this was not the case on Friday. And not only Friday, if you look here at the historical flow tab for last week, it actually was pretty consistent the entirety of last week. So if you go here and filter for above 1 million in premium to see where the whales are, where they're putting their money, you could see here a 78% puts to 21% calls. That is a flip from what we've been used to all of 2024, like I just said. But you could see the ones I just showed you here, and then also some extra ones from earlier on in the week, like this $2.6 million 520, which is a decent amount out the money for the September strike over here. 1 million, 1.6 million, another 1.6 million, and 1.8 million. These were in the money, but not too far in the money either. So very interesting to see this uptick in puts. First of all, this is not characteristic of this year so far. So that's one. And then two, if you look at the chart over here, there was an equally interesting rejection that took place on Friday. There's a couple things I want to highlight with this. So listen to what I have to say here carefully, because you can use this in your own trading beyond now, whenever you want in the future. So first of all, we had, keyword has had, a cup and potential handle formation. But as you can see here, the cup and handle did not work out because it was only a potential cup and handle, and it had a breakdown. If you've been watching these videos for a while, you know whenever there's a characteristically bullish setup that results in an invalidation, like we had here, we had a cup and then an invalidation of the handle, it typically means there's an even more bearish outcome that will occur afterwards. And the reason that's the case is because, well, first of all, a lot of bulls get trapped because before it was a bullish setup, but then also too, it shows bulls were unable to support prices at higher levels. So that's two key things there. So that's exactly what happened as of Friday after this rejection. Another thing that happened is we had a gap up and a very strong first 45 minutes. You could even consider the first hour to be very strong. And then an immediate rejection and what we call a gap and crap, which means we had a gap up. It actually continued after the open, and then it fell straight back down to close back under where the previous close was. That's considered a gap and crap. Typically, that's a precursor to more downside after. So now I've identified two things here that are pretty bearish. We have the invalidation of a cup and handle. We have a gap and crap after a very strong initial hourly candle for Friday. So that's two pretty bearish things that just happened from Friday alone. And also you could pair that with the amount of put flow we saw last week. It paints an interesting picture for the week ahead, which also happens to be a holiday week with the 4th of July approaching. So certainly going to see some type of fireworks this week at some point. So very exciting in terms of opportunity for trade setup, since there hasn't really been that much volatility as of the last 2 weeks or so. You can see here just a ton of chop, pretty boring for us traders whenever there's this type of chop. So this is certainly welcome, what we saw over here. But as for a trade setup for this week, I was looking this weekend at a couple levels. First of all, we have a level over here where you could see 542.43 roughly. This equates to 5,446 on the S&P 500. This was a perfect retest of a previous range that we had traded within over here. You can see there's been numerous rejections off this level. We actually closed exactly on this level before on the S&P 500. There's two levels you can consider. This is one of them. The top of the range here on the S&P 500 would be up here where we had this flat top reversal as well as another rejection. So it's another level to watch. And conveniently, this is about where we closed on Friday. So funny how that works. But these are two levels that I'm watching. And then the third level that I'm watching is all the way down here where you could see it's more so of a range, but I'll just call it a level for simplicity's sake here. Right around 420.30. You could see numerous wicks over here, numerous supportive retests before continuation to higher. So these are the three levels on the S&P 500 I'm watching for this week. If/when one of these levels is retested this week, it's going to give us a form of a bias for the market. And what do I mean by the bias? Well, first of all, if we remain above 544.11, as you can see here with this level, then we're probably going to see some type of a bounce from here. I don't expect it to get past where the current all-time high is just because of this hard rejection, but we're probably going to see some type of an intraday bounce higher, maybe to 546 to start off the week, as long as it remains above this level. However, if this level breaks, either we gap down in this overnight session or it just breaks down below on Monday to start off the day because we had excess weakness from Friday's sell-off, then the next level of interest is 542.43. If we can stay above that, we're likely going to remain range bound, relatively speaking, within this range, maybe a little bit higher as well to like 544 or so. Would not be surprised to see it range bound from here. But as long as it remains above here, we will stay in this general vicinity. Where it gets interesting is if we were to break below 542.43, because that is part of the previous range that we traded within before, and there's a lot more room for this to fall. If that takes place and we have a breakdown below, I'm actually interested in some type of a long position around 540.30 if that takes place this week. And the reason I'm interested in around here is because, well, one, we know it's a key demand zone and also just supportive level, so you can see from back here, but then also that would be the last opportunity for bulls to hold price up before entering this gap over here. It's a pretty large gap. It's actually a breakaway gap that occurred to the upside, and normally when you have breakaway gaps, it signals some type of upside momentum in the macro picture. Bulls do not want this gap to fill, at least in the near term. By near term, I mean like within the next month and a half or so. And the reason they don't want that is because they want this momentum to stay constant. They want it to remain in this bullish momentum phase, which means holding above this breakaway gap where the previous close occurred. So going back to this level over here, as long as 540.30 holds, we will continue to remain within that bullish trend. There isn't that risk of filling this gap over here, because once price gets into this gap, it's most likely going to target a gap fill afterwards. That's not always the case, but in this case over here, it's just a substantial gap and there's just no support below here based on what I see, that it seems like it's a likely scenario that this would fill if it entered again. Hence why 540.30 is critical, and that's why I'm interested in some type of a long position. Also, risk on a long position around here is great. I could use something like 538 mid, 539 as my risk for a long position. I could trim at 542, 543.98 for this level here, etc. So a lot of opportunities with a long position. Of course, it does mean that we have to retest this 540.30 level. So that's something that I'll be watching for if that can take place this week. Otherwise, as long as we remain between here, like I said, probably chop ahead. And even if we remain above 543.98, it's probably just going to stay within this range over here, about $1 to $3 range, because this was a very substantial rejection. Until we can get back above, I'd say 548 mid, like around here where these numerous rejections occurred, and definitely above where this now double top is, we're probably not going to see the extent of aggressive upside as we saw previously from over here, as we saw from over here once this range broke out, etc., etc. So really, bulls want to get back above roughly 548 mid to 550 if they want to have continuation to this macro rally. Until then, it's going to be more so of trading ranges. For example, 540.30 would be a great long ad in my opinion for trim to the upside. Probably tops out around 545, 546, maybe even leave runners in that case to see if it wants to retest higher again. But that'll be up to my discretion once or if this level is retested, which I would not be surprised to see it retested after such a hard rejection from Friday. So that's my plan for this week. It can go into next week as well, just because there is a holiday coming up this week, so could delay things, of course. But this is kind of my thesis going into the month of July and what I want to see here, because I see this as the best trade opportunity, long position around 540.30. Great from a risk perspective. And also, if it doesn't want to go to 540.30 and it just wants to keep going up for whatever reason, despite this hard rejection, despite the put flow, not my base case, but if that wants to take place, then I can just add longs over this double top over here. Because once we get back above, like I said, that 548 mid to 550 range, and this is just going to continue, be smooth sailing. I'm a lot higher, probably to 5,600 on the S&P 500 for SPX. So until that can take place, we're probably going to be range bound around here. That's just the reality of what I see right now. So thought I'd share with you guys today. And last thing here, Amazon is one that I'm looking at. This is interesting because we finally broke out of a pretty lengthy range, as you can see here. A pretty long time that we were within this range. And it finally broke out as of last Wednesday. It was able to hold above on the weekly as well. So if we see a retest around 1D974, it'd be great if it happened around the same time that the S&P 500 could retest 540.30. But if we see a retest over here of 1D974, which is the level that led to this breakout, then I'm interested in adding on a retest of that previous range at some type of long position with my risk being a bit under. So I am looking at this. It's on my watch list as well. And based on flow from last week, I had a pretty bullish breakout, not only in terms of volume that we saw on the breakout, but also the flow had a large uptick. There was a lot of monetization on Friday, as you can see here. Not surprising we saw this rejection because of that, but also if you look at the historical flow and go a little bit earlier on in the week, there was quite a bit of bullish flow. Like if I go back to over here, you can see 1.5 million, 1.6 million, 6 million, et cetera, et cetera. Some of these were contract rolls actually, because traders were looking for even higher price discovery. So it did end up going to this 200 strike as well, which is cool to see. But I am interested in this. Would like to see a lot more of these prints early on, especially if it's able to retest that 189.74 level. If that's the case, that is a nice confluence for a long position. And regardless, not going to take any more of your time. Went over a lot today. If you enjoyed it, let me know in the comments below, and I will see you in the next video.